Good morning. It is Friday, October 20th. I've been goofing around on YouTube Live, but I also am. It is defrost your refrigerator, dear, here in Gary's household. So if you hear something beeping in the background, that's exactly what it is. Where are we on SPY? We're out. Look at the algorithm. Got you out with a half-point gain. We used that 200-day as resistance level. It didn't fill the gap all the way up there. You're looking at weakness. Why are you looking at weakness? It's the 10-year bond. Let's go over the heat map first. Yesterday's heat map, horrific. Big red right there. Tesla, huge red. BlackRock, 7%. I mean, Morgan Stanley, you're looking at financials. You're looking at it across the board. Even Eli Lilly was down 3%. Look at real estate. I mean, your REITs are just getting killed. Railroads, United Pacific up 2%. It's just a bloodbath, except for Netflix up 16%. Netflix is up again today. CRM, Salesforce up 1%. ServiceNow up 1%. Microsoft up 0.5%. You got a lot of these chips, the semiconductors down. What's going on? It is the 10-year. 100%, it's the 10-year. The 10-year right now is at 4.95. This went over 5% and pulled back a little bit. This is what's hurting. Understand, the Japanese are no longer buying our bonds. The Chinese are no longer buying our bonds. So what happens is the yields go up because people want to pay less. And so the price of the actual bonds go down because there's no buyers. It's a simple market reaction. And until this is done, we have problems. And Jay Powell yesterday ignored it, kind of like he ignored inflation. And he sat in there too long, waiting to fight inflation. And so now you had a historic run-up. Kathy Woods, who's an economist, says she hates Jay Powell and he's ruining the economy and blah, blah, blah. She's kind of right. I mean, he's just, and it's not Jay Powell's fault. The Fed as a whole, as an organization, typically just stays too long. And they don't do things quick enough. You don't want things done in the economy very quickly because then you can lead to unintended consequences. And we're still the greatest economy that this world has ever known. So, he's doing things measured, I would say. But I don't think that a rate increase is likely in November, maybe December. That would be my guess. But I don't see any time he's actually pulling down rates. And that's what you've been hoping for with SPY. And SPY has been pricing in that at some point. You can see the MACD is crossing down. Our RSI is at 38. You're not completely oversold. But that 10-year is actually killing it. So one thing that I want to talk about, and I'm not really going to talk about it too much, but I will put it in the newsletter, is this psychology. This is the psychology of mathematical principles of profitable trading and how understanding this can help you become a better trader. And it's drawdowns. It's required win rates. The drawdowns you can see. In order to, when you're down 90%, you have to go up 900% in order to recover. So you want to take these mathematical equations into consideration. I'm not great at math. Your boy is a bit autistic when it comes to math. I just look at things and I understand things, but I don't do well with numbers. I will, exaggerate numbers 90% of the time. I'm exaggerating the numbers. There you go. But I'll include all of that with a little commentary in the newsletter. And by the way, if you're not subscribed to the newsletter, it's dailystockpick.substack.com right here. Yesterday's newsletter, Netflix killed it. Tesla is down. And we talked about Devon might be buying MRO, Marathon Oil. So you can take a look at this. It's free. The Weekends does have a paid subscription. It's typically more educational than it is kind of, hey, here's the market kind of stuff. And it's really the way I see things, the way I do things and stuff like that. You may not want to, listen to me if you followed me into SEDG. You probably are cursing me right now. SEDG. This is SolarEdge. And we talked about SolarEdge. If you're new to the podcast, this circle right here is where I bought, saying, hey, it's going over 300 because it's gone over 300 all the time. Well, this is the consequence of higher for longer. And they reported earnings here, and it was a disappointment. I waited for earnings. Excuse me 1 second. But they reported earnings after Enphase had significantly downed their forecast. And Enphase, which is focused in California, SEDG, which is focused more in Europe. This is one that I bought here. And I was considering dollar cost averaging. I have not added to this. I wanted to wait until it had confirmation over that 9-day. It never got confirmation over that 9-day. So where are we today? We're down at this buy was up here at 250. I think I may have bought it at like 260, somewhere in that neighborhood. In fact, let's go over to Savvy Trader, because we can look at let's go to Daily Stock Pick, savvytrader.com/daily stock pick. If, by the way, don't remember all these links, just go to Linktree, linktr.ee/daily stock pick, and you can see all of that. If we go over here, I have two portfolios, the trading portfolio and the core portfolio. The trading portfolio, we can look at this and we can go over to SEDG. This is where I journal a lot of my trades. Here we go. It was a $2,577 buy-in for SEDG. I bought at $257 when the algorithm said buy at $251. Now, here's the thing, and this is why it was such a bad trade. I said it was getting up to $300. Well, where did it get to? It got up to $288. I had a great gain on this one, just in what? From June 27th to July 17th, less than a month. Great trade, lost confirmation. I should have been out. This is where journaling your trades comes in. I should have been out. I should have been out at around 270. That's absolutely 100% where I should have been out. FOMO, greed, just thinking that this was getting to 300 and I should just add to it. Absolutely 100% a mistake. Higher for longer. Got this one. And where is it now? It's at 76. It's at 76. We are down. Let's see. Let's go back to Savvy Trader. We are down 70%, $1,827. I will be selling this today. There is no reason to stay in this one. Shares plunged 20% after the solar company lowered its third quarter revenues to between $720 million and $730. CEO Zvi Lando said the company experienced substantial unexpected cancellation and pushouts of existing backlogs from its European distributors. Substantial unexpected cancellations and pushouts of that means people are canceling. Higher for longer is killing this one. They don't want to install solar. Even Brad from Stock Market Nerd right here posted about this one. He doesn't own SEDG. He doesn't follow SEDG. This is 100% getting into the larger economy. It's just hitting SEDG hard right now. But the rest of these are unintended consequences of higher for longer. Tough times to be in the cyclical solar energy space. SEDG, 20% light on revenue, 900 basis points lower on gross margin, 80% light on EBITDA. Yeah, it's getting hurt, and it's getting hurt hard. So I would not, while I'm good on some, this one, complete loss, but I will be getting out of this one 100%. I don't believe in this company anymore. I don't believe they can turn it around. So I'm getting out. Where am I putting that money? Probably into another one of the core portfolio. And that's kind of the point. If you want to follow the core portfolio is for free here in Savvy Trader. You can follow it. It's 35 stocks right now, 36 stocks, somewhere around there. I'd like to get it down to about 25 or so, but these are quality names, good companies with good earnings. There's a couple in here, like Coke. I still have Coke. I still have Pepsi. I've got to probably update this one a little bit. But yeah, these are quality names. If you like Seeking Alpha, one of the features that I really like about Seeking Alpha is that you can include the core portfolio in here. And Seeking Alpha actually rates the core portfolio. Well, what does it tell us our health of the core portfolio is? It says, awesome, you have 8 stocks that are rated high. I have nothing rated that a sell, a strong sell, or not covered. Great. How do you compare? Your portfolio is in the top 29% of all portfolios, 3.62. That's great. What do analysts think? Watch out. You have one stock that's at risk of performing badly. What's that one stock that's at risk of performing badly? It's XLY. That's the only one. Your dividend safety score. Be careful. One of your stocks has a risky dividend play. Let's see. What's the one stock with risky dividend? TSM. But you know what? We'll take a look at TSM because they just announced earnings, and it was pretty freaking good. The thing you have to worry about TSM, just full disclosure, is China. It's China. But you have 15 stocks with high safety ratings. What are the strengths and weaknesses of your portfolio? It's valuation, because I'm heavy tech. So the valuation is crazy. Profitability, A. Momentum, B. Earnings per share revisions, B-. Growth, C+. So I like this. You can import your own portfolio. Again, I have a coupon code down below. I think a year is $189. I really like this. This is just one of the features of Seeking Alpha. The other thing that I really like about Seeking Alpha, and this is what I was goofing around on YouTube with, is the trending news. I could geek out on this all day. In fact, I have a bunch of links. Let's see. Mara, one of the things we found in the trending news was Coinbase legal chief expects SEC will approve a Bitcoin ETF report soon. Well, what did that do to Mara? Mara today is up, 6.87%. Like I said, buy this one. It's going back to 10. They announced a Bitcoin ETF. This is easily at 10. Easily at 10. Coinbase, probably a good bounce as well. I just like Mara because they actually, they mine. They're a miner. So what do? They mine Bitcoin. They mine the other cryptocurrencies in large scale. And they sell when it's high. They buy when it's low. Essentially, when you mine, you get rewarded cryptocurrency. So it is expensive. I understand that. But that's just one of the things that I found. The other thing that I found, Eli Lilly. And I was going off about this. I'm not sure this is the right thing to do. But Eli Lilly and Novo Nordisk, they're eyeing obesity meds for kids as young as 6 years old. Do I want to be in a world where kids are getting shots for obesity? I don't know. I mean, there's definitely some issues with genetics and things of that sort that probably could benefit from this. It's also the food that we give our kids. So. And listen, I just got done watching that great game last night between the Jaguars and the Saints. Kudos to the Saints, man. Those guys put up one hell of a fight after being down. But those linemen, they need the obesity. They ain't taking this weight loss drug. But this is what's kind of driving a lot of the Walmarts of the world, the grocery chains of the world, the Cokes, the Pepsis. This is what's killing them is the fear of these drugs coming in and actually reducing the profits of the food makers. So, I found that one. Eli Lilly, by the way, nice little pullback. We talked about this one getting to 600 and how you probably just want to buy it. It's up 592, but see that little turnaround there? I mean, you got that little button hook. You're still in at 544. I wouldn't worry too much about this gap. I just don't think this is the weight loss drugs are the new AI. I mean, let's be honest. AI has not performed great of the past 2 months. You've kind of just capitulated around the prices with most of the AI folks, other than SMCI and NVIDIA, which has significant volatility that you could trade. But these drug makers, they just haven't had the volatility. It's been, if we look at a weekly on this, it hasn't pulled back. I mean, you've been, hanging around that 50-day. And if you want to wait for that 50-day to come into play, you may just miss out. Not a horrible thing. I mean, you could always, the valuation of this, the expectation is this is an enormous market that they're tapping into. We went over yesterday how oil, I think oil is absolutely still a big one. There's some ETFs. I will put these in the newsletter: USO, BNO, UCO, SCO, USL, DBO, DRIP, GUSH, NRGU, USOI. I'll put those in. Those are ways to play the oil market, and do your research, understand what you're buying. Your boy here got into oil when oil back in April of 2020, when oil was at like $6 a barrel. And I said, oil's got to go up. And so I bought UCO, triple levered on the futures. Well, what happened? UCO wound up reverse splitting. And I didn't know that oil could go negative. Nobody thought oil could go negative. The oil companies were paying to store their oil on ships, in caves. They were paying anybody that would take the oil so they didn't have to shut down operations because the world wasn't using oil. So just understand you need to know what you're investing in. This is 4 stocks to watch today. And this was interesting. I took a look at this one. Shares of Jazz Pharmaceuticals added 5% in pre-market after Bloomberg reported that the Ireland-based drug maker was exploring strategic options, including a potential sale of the company. It's a pharmaceutical company, so it's outside of my area of expertise. But one of the expertises that I do have is reading this chart. And if we take a look at this chart and we understand how buyers look, so if a company's coming in to buy this company, this is just 2 years ago where it was 185. That might be where a bid comes in. Might also be here at 169. Either way, it's going to be over that 200 day. If they're exploring a bid for sale, it's going to come over that 200 day. And if we look at this, right now you're trading at 134. Let's go over here. I'll use the free version. We'll look at FinViz to look at some of the valuation. They're losing $86 million. Not great in a market like today. The forward PE is 6.56. Year to date, it's down 16%. Target price is 201. Let's see how often it's covered. Well, you've got 2 initiations this year. One, Wells Fargo in June. Equal weight, they reduced the price target from 184 to 140. Where you're trading right now, 133. Not a great price. September 29th, Raymond James initiated but didn't put a price target in there. So you do have some issues with this one. Price to sales, 2.23. That's not huge. That's not enormous. It doesn't have a dividend, 2,800 employees. I would take a look at some insider sales. You can see they're selling at about 138. This is a director, an EVP. If they are exploring options to sell, probably not a great time to actually sell. But they're only selling like $171,000 worth. Let's see. Yeah, each director looks like they sold the same exact amount. Something went on there. Where they all got together and maybe they had to reduce their exposure or something. The EVP, Chief Legal Officer, sold 1,500 shares, $216,000. Understand that this has a market cap of $8 billion. This is not much for people who run an $8 billion business. These people have millions and millions of dollars invested in this company. So they're probably just putting in pools in their backyard. So great opportunity. Again, this was found from just on Seeking Alpha. I geek out on Seeking Alpha. I could sit there and read the articles all day. I don't know, honestly, between you and I don't know what's paid. I don't know what's free. I know the portfolio thing is paid. So if you're somebody, so let's say you listen to my podcast, but you don't really understand charting, you don't know charting, and you don't have an interest in actually learning charting. You want something that is more emotional. You don't want to take emotion out of your trade. You say that, hey, I want to just buy and hold. That's where I think Seeking Alpha comes in, because it can take a look at your portfolio. It can offer you options. You can sit there and read news all day. You can join investing groups. You can look at the news. You can do analysis. You can do your charting. So for instance, let's say we talked about Devon potentially buying Oxy. Let's see how those two perform against each other. We can go to charting and we can just select symbols and we can type in, it's Marathon Oil, not Oxy. Marathon Oil is what they're buying. So here you go, over 1 year, you can see the S&P is beating both of them, 15%. Marathon's up 3%. Devon is down 27%. You look at 3 year. This is going to be looking a little bit better for the oils. Devon is up 533%. S&P up 24%. Marathon Oil up 603%. So the oils greatly outpace on a 3-year. It's a 1 year and the year to date, where Marathon clearly beats year to date. I mean, Marathon is up 13%. The S&P is up 11%. So that's where I like seeking alpha. I think it provides a great opportunity there. But if you listen to me, and you know, my king daddy is TrendSpider. This is the one where I kind of put my bread and butter. And the reason was I started this was in COVID. My buddy Steve and I developed an algorithm to protect us from the COVID downturn. Look at Dexcom up 13%. Dexcom is a beaten down drug. Diabetes monitoring system. Just beaten down, but it's at $86. I think that gets back to $100. But there's some dangers in there and some extreme dangers with competition from Apple and others. But this King Daddy of TrendSpider, we developed a 4-hour algorithm to protect us from the downturns of COVID. Do I always listen to it? No. SEDG is a great example, like I said earlier. I don't always listen to the algorithm, but I actually understand the algorithm, and I understand that the 9-day is my key point of confirmation, and understanding that is key. If you look, Taiwan Semi, we got another leg up going on in Taiwan Semi. You had your earnings. They were very positive, super positive. $86 was the buy here, September 28th. You're at $93. You just got another leg up. Just got another alert on my algorithm. And right here is the 200-day at $95. I think you go back over that. I can see a gap right here at $97 that hasn't been filled. Might get filled. Just understand that 200-day, the 50-day is just starting to turn positive, but that 200-day is going to provide significant resistance. So I don't know that I'm buying it at 93, waiting for it to get to 95, but we do have a second leg up there. The RSI is at 65. Take a little temperament. The only reason I bring that up, this is the only stock in my algorithm that within the last candle triggered a buy. Within the daily stock pick core portfolio. It's the only one. Yesterday was just horrific for stocks. So that one, it's up 1% today. And it was up after earnings. You got a nice gap here between the earnings of 89 and 92. Wait for a couple of days. You'll probably get to buy this one under 90. But I do think long-term, this is a great, great company. What's interesting about scanning this morning and the scans, the only thing that really came up, and they came up big, are the levered ETFs. And the levered ETFs all on the short side. These are all bear ETFs that got additional triggers to buy. SRTY, which is Ultra Pro short of the Russell 2000. That had it buy here at 42 on September 7th. We are clearly in a downward market. When this goes up, the market is going down. This is a short of the Russell 2000. SMDD. This is an ultra pro short of the mid cap 400. This one had a new buy here at $21.31. The algorithm got you out on October 11th. Last time, it was a buy here September 7th. So 1 month, 8%. Again, this is a short of the mid-cap 400, SMDD. SDOW, this is a short ultra, which means it's 3 times levered, of the Dow. This one got you in on September 19th and got you out with a nice 6% gain on October 12th. So it's almost a month. Gets you in again today. The RSI is a little bit high on this one, but the MACD's crossing up, 2647 on SDOW. Now, real estate, we talk about DRV and DRN. DRV, which is the bear, 3 times levered bear. This got a buy yesterday at 63.71. We have one at 63.48 right now. It's trading at 65, 65.69. It's down 1% today. So again, all of these are short. Another short one, FAZ. This is the financial bear, 3 times financial bear. $20.89. This is just getting you out of a 6% gain. We're not done. SDS. This is what's crazy. ProShare Ultra Pro short S&P 500. Another one, 3666. Now understand the S&P 500s, most of them will get the same trigger because they should follow the S&P 500. Sometimes they don't. And understand volume. You're going to need to, SPXU is probably the biggest one, I think, as far as volume goes. But understand getting in and out of these might be tough if you see some big moves. So you want to make sure that your brokerage is, you're putting in your stop losses at the appropriate price. And just understand it might not, might go down a little further if we have some type of catalyst, huge up. If you have some type of catalyst where, all of a sudden Jay Powell says, hey, we're cutting rates next week, and the market goes up 5%. Well, these are going to go actually down because these are short the market. So when the market goes up, these are going to go down. HIBS, S&P, high beta bear, 3 times short. HIBS, I've traded this one in the past. SPXU, this is the Ultra Pro short S&P 500. This one got you in on September 15th at $10.82. Got you out at $12.60. I'm sorry, with a 4.5% gain. Got all the way up here to 12. It got you in yesterday at $11.68. You're at $12.16. This is what's going on. This is clear as day. We are not in a confirmed upward moving market yet. All of these short ETFs identify that we are in a downward market. So I want you to be careful if you're buying. You can trade these ETFs all you want, but if you're buying for the long term, this is the time that you want to identify the stocks that you want to buy long term. This is where it becomes difficult. Buying in the long term is when you want to buy down. Look at QQQ. You're under the 200-day. Let's go to the daily. We'll just go to the daily on the Qs. If you're buying for the long term, you're not even at the 200-day. We talked about this, back here on September 28th. You're still 7% above your 200-day on the daily. Remember, the 4-hour algorithm triggers a little bit faster than a daily because it's 2 candles instead of 1 candle. If we go to the weekly, you're still probably in an upward trend, significant up. Yep. Look at that 50-day, still positive. Look at the 9-day. I mean, you had confirmation all the way up until last week. You got confirmation. Now you're back down below confirmation. The 21 still positive. The 9-day still positive. The 50 and the 200 is still positive. You got a nice volume shelf down here at 331, which is a nice 10% down from where you are now. So again, pick your stocks. Understand you want to get into stocks. The core portfolio is key for this one because these are stocks that I personally own that I believe in long term. And they're good stocks. These are not ones, Boeing. Jim Cramer was on air the other day crying about Boeing, how he made a mistake on Boeing. I don't think he made a mistake. I just don't think he bought in at the right price. He bought in around 200. I say anything under 200, you get this stock. Anything over 200, you can absolutely sell it. He doesn't necessarily agree with that trading philosophy, but that's my thing. That 200-day right there, that 200-day is at 203. That's where I got the 200 mark. And down here, I mean, this was at 241. Look at that 200-day moving down. The $200 price point is the 200-day moving average. Now, you've got a golden cross here on the weekly. That's why I say I don't think this one's horrible to buy right now. You got that golden cross September 25th. Yeah, we're in a weak period. At 183, am I buying more? Yeah. You got earnings coming up next week. Let's talk about Savvy Trader. We'll go over the earnings. One thing I don't like about Savvy Trader, and I have been a big fan of Savvy Trader, is that they moved earnings. You have to upgrade to Pro to look at your portfolio for earnings. Don't like it. Completely understand. They're there to make money. This is not a free service, so I get it. I may upgrade to Pro. I don't see the benefit of Pro right now. I don't get what they're doing with their service at Savvy Trader. But I'm going to continue to use it, the free service. Let's look at next week, because next week we have some big earnings. We've got Microsoft, we got Google, we got Visa, we got Meta, we got IBM, we got ServiceNow, we have Amazon, we have Intel, we have Vail, we've got ExxonMobil, we've got Chevron, we've got MasterCard, we've got Merck, we've got TMO, Thermo Fisher, we got Coke next week. Will they succumb to even more pressure on the dollar side? Will they cut the dividend? This is a dividend aristocrat. I don't know. I mean, they're supposedly getting hurt. Verizon, AT&T beat. Will Verizon beat? You've got a lot of earnings next week. This is a big week on earnings just because you got big movers. I mean, this is going to move the market. Microsoft, Google, Visa. Meta is the one that I really want to focus on because I think Meta is one of the best opportunities out there. I think under 300 was the buy. Absolutely. Can you buy here at 313? Absolutely. I think you can buy here at 313. This is one stock that I don't think has performed horribly in this downturn. Look at that. 307 right there. September 29th. You got to buy in the algorithm. Hasn't gotten you out. Probably will get you out here soon. The algorithm has some moving averages in it. So it may get you out here soon if we continue to slide. I would say that 309, if you want to get this before Wednesday, I would say that 309 price is probably good. That's right around the 50-day. And the 50-day is a good tenure on this one. What you want to make sure of with Meta is that they continue to cut prices or cut spending. If, for instance, he's going to go out there and he's going to say, hey, I'm going to spend more on the metaverse because we're making more money. That's where you kind of get into, hey, douchebag Zuckerberg, stop spending. Nobody's putting on goggles to sit in the metaverse. He's selling the goggles, I think, at a loss, if I'm not mistaken. But you're at 18 times forward earnings, 1856. That's nothing. If they continue to grow, the problem that you have is you're up 160% year to date. It's not crazy, but what's the target price? 284. And you're at 313. So it's a little bit over. Now, that 284, it's not crazy to think that you could beat that. Look at these. Most of them are at 350, 380. That's a big move from where we are now. You got that double top that you got to get over at about 330. 330 is kind of, if they don't announce something crazy, like really good earnings and stuff, but let's be honest. I mean, I use Facebook for this podcast. I use Instagram for this podcast. I probably should use WhatsApp for this podcast. But there's so many things there's so many ways. If you're a target marketer, Facebook and Twitter's not horrible, but they still don't have a very good interface to target market. And the response that I hear from my marketing friends is Twitter is just not that great. Facebook, Instagram, probably the best. In fact, we talked about my friend owns a food service business. And she said the response from Instagram, great. Response from Facebook, it's okay. But yeah, so just understand where we are. That 10-year, 100%, that 10-year is driving this. So understand as we get to 5%, unless buyers start to show up, we will not see the second leg of this. Even if earnings are good, we will not see the second leg of this upturn until we get some type of resolution within the bond market. That's what's hard about this market. But what I want you to do is identify your long-term buys. Do you want to buy Apple? Apple, we'll look at Meta. Look at Meta's at forward times 18. Look at Apple. I mean, Apple, forward times 26. That's expensive. I haven't been touting, hey, buy Apple here at 175 because it's expensive. If there's a downturn of iPhone sales, the market's going to rip into this one. Am I trimming? I've trimmed at 190. I don't know that I want to trim at 175. I do hold a decent amount in my retirement accounts, but I own more in my brokerage accounts, and that causes a tax event. I don't need money. So do I want to actually trade it and sell it now and buy it back later? Maybe. I mean, here on the 4-hour, you're below that 200-day. We talked about the 200-day providing resistance on other stocks. It does on Apple too. And 200 days at 182. You had this death cross of the 50-day right here at September 7th. If they come out and they say, hey, we've lowered our production costs because we've moved to India, or we have more production, and that's why you're seeing some weakness on iPhone sales. You just don't know about this company. Now, I am, it's funny because Substack with the newsletter, the paid newsletter, the Apple, when you sign up through the website, Apple takes 30% out of the subscription. So, I charge what, $80? I think it's about $8 a month. They take 30%. I mean, I lose almost half between the Substack fees and stuff like that. I'm not happy about it. I get it. They built the platform that and they provide the services. So they take the money. Is it fair? Well, European Union doesn't think so. And I think the American government doesn't think so. But why not buy the stock? Because that's who's making the money. So I don't mind sitting here. And if it gets back down to 169, maybe I'll add more. But I don't feel like selling at 175. Not my thing. I just kind of believe in it long term. Amazon, we talked about Amazon. Get it under 130. I like this stock under 130. It's under its 200-day right there. It's got the death cross, so it might go lower. I just like that Amazon stock. I mean, AI, I think Google, which reports next week, I think Google's fine. I think they're going to report some crazy stuff with AI. The cost of AI versus the traditional search is what's going to bring Google down. But I don't think they're going to announce anything like that. I think at 140, we talked about Apple being 26 and Meta being 18. Let's look at Google. The forward PE of Google. It's 20. You're right in the middle. So it's not crazy. And you're only up 55% year to date. And they had a horrible year last year. If we go over to Seeking Alpha, and let's just we'll look at Google. And we'll type in some of the other names. Let's select symbols. We'll get rid of the S&P 500. We'll put in Meta. We'll put in Apple. We'll put in Amazon. We'll put in, let's put in NVIDIA, since we're talking about AI. And 5 stocks. It's probably good enough. I mean, let's just take a look. And you're looking, see, this is 1 year. Google's up 38%. Apple's up 21%. The big laggards, Amazon, up 11%. You got Meta up 134 and NVIDIA up 249. Year to date, same kind of thing. Google's up 54. Apple's up 39. Amazon's up 48. But NVIDIA and Meta, up huge, 194 and 159. So you go out even 5 years. Look at Google, 149. Look at Meta. It's only up 100%. I say only. But Apple, 217%. Amazon, 42%. Just to understand that ARK funds, she says the goal of the ARK funds, investing in growth, it's to double your money. So it would be 100% return in 5 years. The traditional S&P looks to double your money, I think, in 7 to 10 years. I think that's the one. NVIDIA is up a crazy 625% in 5 years. So this is what you want to keep an eye on. Where are we? This is why NVIDIA is crazy. I mean, if we go over here and look at NVIDIA, the forward PE of NVIDIA, I think, is like 40 something, 25. But they're growing so much, that's actually coming down. The PE is 102, but they're growing so much, that's crazy. But yeah, so be careful in the market. Understand, some of the things that are going on. The 10-year is the key. TrendSpider. If you want access to my 4-hour algorithm, we talked about Seeking Alpha. TrendSpider right here. You get it for, let me see. I think it's $480. Let's look at TrendSpider right now. Product. And we go to plans and pricing. You're going to click on it, Linktree. linktr.ee/daily stock pick. It's $468 for a year. So you'll click on that, you'll sign up, and then you'll email me. You'll go back over to Linktree, and the email is right here, dailystockpick3@gmail.com. You'll do that. Seeking Alpha, simple. You don't have to email me. Just click on that, sign up. Webull, we talk about Webull all the time. I think Webull is great. I go on Webull. Seeking Alpha has kind of taken over Webull for me, and the only reason is because I get more out of the computer stuff than I do on Webull. And I need to start using Webull on the computer because they have a good platform. But Webull is great for me for the app. I love the app. Let's see where I'm on Webull. I put $1,000 in there at the beginning of the year. Right now, I am at $23.95. I keep fluttering between $2,400 and $2,300. But yeah, I like Webull. The newsletter we talked about, it's free. Just go and sign up. Visible, if you're paying anything more than $25 a month for your service, sign up for Visible. Use that link and you'll get 20% off, $20 off your first month service. If you look at their plans, here's what it is. It's simple. It's no hassle pricing. There's no taxes. There's no fees. It's $25. One price, $25. If you want the Visible Plus, it's $35. You get international mobile. The mobile hotspot comes on both. We talked about me in Philadelphia last week. The Wi-Fi in the hotel went out. I did this podcast with the mobile hotspot. It was great. And I'm on the $25 a month plan. So that's the key for that one. If you buy a Tesla or you want to buy a Tesla, get $500 off in 3 months free of full self-driving. Click right there. AT&T Fiber at your home. Go and check out if you have AT&T Fiber. I had a friend here the other day who was working with TurboTax. And the lady at TurboTax was like, wow, your computer is so fast. I can't imagine how fast your computer is. It wasn't our computer. It's because I have 1 gig service, 1 gig symmetrical. It's fantastic. Unbelievably good. So Savvy Trader, we talked about Savvy Trader. I like Savvy Trader. Go and follow me on Savvy Trader. It is savvytrader.com /daily stock pick. And you can follow either the trading portfolio or the core portfolio. The core portfolio, I don't make many changes. Even the trading portfolio, I don't trade much, but I will be trading SEDG today. So there you go. And you have other stuff if you want to tip me and stuff like that. But that's it for the podcast. I will be back Monday. Let's hope we have an afternoon rally today. I think we will. I think that the 10-year hitting 5%, I think it's going to back off a little bit. So I'm hoping on that one. So, okay, take care. Have fun. Enjoy your weekend. Paid newsletter tomorrow. Bye-bye. Enjoy the AI song from, and I still got to do that video. Oh, man, I got a lot to do. I don't work. So I hate work. Okay. I'll do some videos for you. Take care. Talk to you. Wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.